Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Juana.
Okay, we're going to talk about 2026. This is NAR's housing prediction. It's from an article, Housing Market Set for a 2026 Comeback. NAR predicts a lot of cool data in the article. So, Juana, let's just put up the first slide and just start banging out these points. We're here right into the key part of the information here, okay? Okay, so here's a slide. It's like one of the first slides in the thing. There was a lot of information here. This is nationwide forecast. So 2025 was the 2025 forecast. And then 2026, of course, is 2026, which 2025 is basically done. So let's start with this. Existing home sales, resale homes, 0% 2025. So we basically sold the same number in 25 as 24.
Okay.
2026 plus 14%. No, it's not prices, right?
No, that's volume. That's number of transactions turned.
Okay, what are some economic things that maybe will cause, like how do they know? Like what do you think they're looking at that makes them think this is going to happen?
Well, so they went to Pottery Barn.
Pottery Barn.
And they got one of those really pretty crystal balls. They're really expensive.
Crystal ball. We should have our own crystal ball.
I know. Well, we don't have them because it's expensive.
The Crash Bros use bowling ball.
Okay.
And it's black and it just looks bad. They just, it looks terrible. It's black. Okay.
And then they just took a swag at this. Look, what they did is they said, hey, look, and over the last couple of years, we haven't had a whole lot of transactions. On an annual basis, we have about 3 to 4% year over year increase in turns as far as home sales. So we can kind of extrapolate from that we're going to make up for what we didn't do in 24 and 25, and we're going to do it all in 26. I don't know about that. I think 14% is ambitious.
Okay.
But I certainly think we're going to have more transactions in 26 than we did in 25 for a couple of reasons. First of all, there's less uncertainty because the general election is over. The whole tariff thing is over with. A lot of things are over with. Mm-hmm. So there's less economic uncertainty. There's less political uncertainty. Okay. And then the second reason that I think we're going to have more turn is because interest rates are going to probably be more favorable in 26 than they have been in 24, 25. So again, that's going to get people moving in that direction. And last but not least, you have all this pent up demand as far as sellers needing to swap homes for whatever their life changes have been. So they need to move on. So whatever was holding them back is no longer sufficient to overcome the reason they need to move forward with their lives and their homes.
We also have more inventory than we've had in the last 4 years. Still not as much as 2018, 19, 17, 16, all those years. But I think they're looking at there's more inventory, so they're expecting more of the churn to start happening. As interest rates go down, more people are more incentivized to trade their, one interest rate for another interest rate because they want to move or need to move or whatever, right?
Right.
So more inventory unlocked. New home sales was actually down 2% 2025. They're predicting up 5%. Now, Juana, was August or September was like a record for the last 3 years. And it was a huge, massive amount of it. The sales rate was like 800,000 houses a year. Like the numbers of homes that sold in that month were the largest rate we'd seen in 3 years. We also have a few more new homes than we had at the same time last year, right? To sell.
Right. So there were a lot of things at play at that point. Interest rates were right there on the horizon that they were going to go down. We were heading into the fall where a lot of the home builders have their end of year. So they were trying to book some sales so that their numbers look good. So there was this perfect storm of getting homes under contract. So builders were being very aggressive with their incentives and their and buying down rates and that sort of thing for buyers. And, lots of things were going on. So that's part of the reason why August was such a robust month for getting homes sold.
Median home prices up 3% 25, 4% next year. We always joke about this, like everyone who guesses that home prices will be up like 4 or 5, 6% is kind of like that's literally the average for like the last 100 years of real estate. Now, Wanda, that doesn't mean in every market they'll be up 3% because they measure like 400 separate metropolitan statistical areas. Mm-hmm. So there are certainly going to be markets. A lot of them probably are in the South who have currently had year over year losses. You have other markets, Northeast, some on the West Coast, that have had year over year gains. Mm-hmm. But this is aggregate numbers, right? Because the Crash Bros we'll only tell you about the 5 markets where it's the absolute worst, and you'll never hear anything about the rest of the country. And they'll try to paint that as being the whole world. And that's probably a guess too. I guess we'll know more in like a month or two when we get the list of like all the like Fannie Mae and Wells Fargo, and everyone will have their own guess, right?
Right. They will all put their guesses out probably sometime in December, and then we'll have a bit of fun with that and see what their crystal ball is telling them. At the end of the day, everybody is just looking at the same data or similar data and coming up with their best educated guess of what's going to take place. And this is based on static information today, and we know that the world is not static. So lots of things will happen in 2026 that will change all these things and will influence people's decision making and people's ability to act on their desires.
Some of these predictions that do come out are investment banks, and they're trying to inform their clients what to expect in the next year financially or economically. They don't have an vested interest. It's not like they're just going to say, oh yeah, it's going to go up, you should go buy a house. They don't really care. Actually, if you think about it, if you go back to like 2020, 21, for 2 years, all the estimates were below what actually happened. Like they were saying, oh, home prices are up 12% next year. And people were like, that'll never happen. Then they went up 15, 16%. So who knows what's going to happen here? Mortgage rate. So the average for the year was about 6.7. That's still a lot better than it was the last 2 years because we were above 7 for a lot of the time. In 2026, 6. Now that basically take whatever rate you could get today and you estimate that maybe a year from now or sometime within the next year it could be 0.7% less, because you get a 15-year fixed with a really good credit score, you're probably getting 5%. Like that 6% is just it's not like there's a magical mortgage rate that's set, right?
No. So remember, everything is based on your individual situation and your loan product. So that's a lot of variables in there. So these numbers are just kind of a baseline, right? And then depending on where you are, you adjust up and down based on your credit score, your debt to income ratio, how much you're borrowing, or your loan product, part of the country, all these different things.
This is an interesting one, job gains. We've been adding a couple million jobs a year. Of course, this year's the lowest. The recession odds kind of went up this year, but so this year, about 400,000 job gains. They're saying next year, 1.3 million job gains. It's actually like triple this year. It's to be much better economically. Matter of fact, the forecast is so much better that Goldman Sachs they completely removed their prediction for a forecast this year. They said their forecast next year is like 15 or 20%. A lot. It had previously been 45%. Like in May, there was a 45% prediction of a recession in the next 12 months. They were talking about job losses, tariffs, and things like that. And it turns out that probably we've turned a corner on that. What do you think about that in general?
Yeah, I mean, I think the chances of a recession are probably not huge. There may be looking back on it, there may be a recession in the second half of this year and beginning maybe of next year because of the government shutdown and the ripple effect that has through the economy. So there is a possibility for that. But remember, recession is what the government says it is, not necessarily what economists say it is. So there's that to contend with. As far as all these predictions if you look at the predictions, one of the things that you see is what was predicted and what actually happened. Like, they predicted 2 million new jobs, and it turned out to be that it wasn't that. They predicted, whatever it was as far as interest rate. Well, that didn't turn out. So these are just all kind of really things to talk about, but they're not things to necessarily make decisions on. The best time for you to buy a house is when it's right for you. The best time for you to sell a house is when it's right for you. And all these other things, for the most part, they are just noise.
Here's a quote from the article. The upper end of the market is doing much better than the lower end, Yoon said, with robust inventory and strong financial markets fueling activity. Sales in the 750,000 to a million price range have seen some of the largest gains. Meanwhile, inventory remains constrained at lower price points. This is super important. There are markets where prices are up, but it's because people bought more higher end homes. Remember, the median is just the middle house. If you go into a market and every single house sells for exactly what it sold for last year, but you get 30 more home sales in the low end. Even though all the homes sold for the exact same amount, the median will drop. And you'll be like, oh, look, the median dropped 1.7. Anytime I see the median home price go up or down, like less than 1 or 2%, a lot of times that's not really actual home prices. It's just the mix of homes that sold.
Right.
We could also have, hey, they could say home prices went up 15%, but just people bought more $750 to $1 million homes, which in 80 to 90% of the U.S. is going to be the higher end of the higher half of the market, right?
Right. So, I mean, in Las Vegas, you have to go considerably above that to go into the luxury market, but it still kind of proves out because remember, those homes tend to be have a much more higher likelihood of being purchased cash. And so these people are not as affected by interest rates. They are affected by the stock market doing well, which it has done quite well. So you've got the stock market doing well, you've got people buying homes cash. So that's part of the reason why the luxury market has done well throughout the country.
This is an interesting one I'll throw up. We'll talk about this really quick. This is showing the MLS data showing price cuts. So if a house was on the market 0 to 14 days and they cut the price, this is only when they lowered the price, that there was a 4.9% cut off whatever the initial list price wanted. Is the initial list price exactly the market value of the house? Like when someone lists their house for $750,000, is that exactly the value? And any reductions off that are just economic losses to the seller?
No, it's not the value. And most of the time, unless people are very realistic about the value of the house, most people will say, well, but I understand that my neighbor sold for this, but I want to push up the value. Okay, that's great. So that's kind of what happens. That's what you see really in that first 30 to 45 days. You see reality kind of setting in for these sellers. So that's why you see the price reductions in the first 30 to 45 days. It's after that you're maybe wondering, well, what's going on? Is it that it was totally overpriced? Is it that there isn't a market for this home? Because that happens sometimes. So what's going on at that point? But the first 30, 40, 45 days, to me, those price adjustments are just people who are testing the market, and they are coming to a more reality-based, a more market-based price for their home.
Keep in mind, over 60% of all homes nationwide, on average, sell at the initial list price, meaning the agent was able to convince the seller that this is the value of the house and we should list here to be competitively. When you look at all the MLS data, there's like 30-something% only ever get any price reductions. So it's a bit misleading to say, oh, well, if homes, if they don't sell in 14 days, they get a 5% price cut. It's not true. There are a lot of homes that sell in the market for 30 days and then they get an offer and it's it could sell for more than list price, less than list price, or list price, but they didn't have to make any adjustments to it. They just sat on it, and then it finally just sold, right?
Right.
Okay. Any final thoughts? What your instinct, like we just had a listing that we listed and sold literally in like days, right?
Mm-hmm.
And it was low end. It was 400,000, which is below the median in Vegas. I was listening to one of your phone conversations. Somebody had like a $2 or $3 million listing that had like 4 offers in 24 hours or something, right?
Yeah.
So, and then we've also seen it where the homes have been on the market for a while.
Right. So, that just has to do with the strategy. Like I said, sometimes sellers have aspirational pricing, right? And that's when you get into those price adjustments over time. Sometimes there's a strategy of pricing the home below market value to create a frenzy, to create a lot of interest in the home. And then the home will actually still sell for market value because market value is what a seller is willing to accept and a buyer is willing to pay. So in this particular case, there were multiple offers. The home sold for more than the list price, but yet it was still market value because of the way we define market value. So it really depends on what's going on out there. In Vegas, we get a report, and I'm sure lots of realtors all over the country get this from our escrow company. And what we continually see every week is that homes are selling somewhere between 97 to 98% of list price, which means that they're not taking exorbitant haircuts. I was looking at another market where a home came on the market for, I want to say, I don't know, like $9 million and it's sold for like $6.5 million. So that's a huge haircut. But again, it just has to do with different markets have different situations. In the Las Vegas market, you'll find that agents don't want to offer substantially less than list price because we tend to sell very close to list price. So that's one of the things that happens to us when we have buyers from other markets who come to town and they think that, oh, well, I can just offer way below list price, and the agent's very resistant to doing that because they know that in our market we tend to price things pretty close to what we expect them to sell, which is what I started the conversation when I said that in Las Vegas we tend to sell for 97 to 98% of list price.
That $9 million house was not worth $9 million. That's
Clearly
why it
not.
sold for what it sold for.
Clearly not.
Yeah. Okay.
Clearly not. So anyway,
Yeah.
just thought that was interesting. Please leave us your real estate related comments. We enjoy reading them and responding to them. Like the video, subscribe, hit the notification bell, share the video, and we'll see you on the next video. Bye.
Bye.